Hello and welcome to another update video about Bitcoin. Yeah, today, obviously here in the UK, it's already Friday. We are going to have the CPE core PCE data release. Yeah, you can see that always nicely on Forex Factory. It's a pretty good website that I normally use. I've been using for a long time. And you can see this is actually scheduled for tomorrow at 8:30 Eastern Time. Inflation data, that's a metric that the FOMC Fed uses when they make their, or basically use it as one of the metrics to base their decisions in terms of, interest rate increase on in around 1 month. I can't remember the exact date. We've got the next FOMC meeting, and let me actually just double check that. We can always see that on the FedWatch tool, the CME FedWatch tool, which is pretty accurate and has been. So in 26 days, and currently they forecast a 25 basis point increase. But since the last time I have checked, the probabilities for a 50 basis point increase have certainly increased. Yeah. So, but still, the probabilities for a 25 basis point increase are still way higher. Now let's see if the core PCE data will change that, because that's one of the most important inflation metrics based on more like the consumer side of things. And we have already seen with CPI that inflation runs a bit hotter than originally anticipated. And here you can see that the forecast is 0.4%. Yeah, previous was 0.3%, which means it's going up a little. Let's see what the actual figure will be. If actual is going to be higher than forecast, then we'll probably see a bit of a dip in crypto, and it would be good for the dollar, DXY. If it's lower than 0.4%, then we'll probably see a bit of a rally. If it's as expected, it will be probably fairly neutral. I think the last few times it was basically coming in as expected, and we saw a fairly neutral reaction. Basically, it was just doing nothing. But I sincerely hope we see something, because I'm really getting annoyed by this particular range here in which we've been now for a week. But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials, and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. Okay, so first things first, just to highlight, nothing has changed to the previous video, but I would like to talk still a little bit about the bearish count here as well, because a few people asked me, can you focus on the bearish count? We can do that afterwards. First, we take a look at the lower degree wave count. We still have the scenario in which, the primary scenario so far, where we say we rallied here in a 1, 2, 3, bottomed here in a 4, and we are moving, maybe now, maybe tomorrow, up in a 5th wave. And we possibly have completed already the first 1-2 setup of that 5th wave. But you can see we're just moving sideways, and we're sort of hovering in the lower half of that range, which certainly increases probabilities that the range will break. So at least I wouldn't be surprised anymore. I mean, You should never be surprised anyway. I did explain, I spent a lot of time in the last few videos to explain that the upside expectations have been met. Yeah, so minimum expectations have been reached. So that means we need to be ready that the move up could be finished. Do I currently believe it's finished? Not yet. But what I obviously assume could happen is either that we go up straight away from here, but it's showing weakness. It doesn't really get off the ground. I think we need some kind of catalyst. Maybe core PCE will be that catalyst. Or that if we lose this support, like yesterday's low at 23,585, yes, we can still retest 23,340, but below that level, I cannot count this as a wave 4 anymore. I would then move it into the scenario, or the chart will move into the alternative scenario, which will be this support area here. So unfortunately, as you can see below this support, we've got this support. And because I will highlight these support areas in a different way now, we're going to take them out and I'm going to put it on the chart, the relevant one for the wave 2 here in this video in a minute. But it will be this alternative scenario, also very likely, yeah. And it would not be a change in trend. It would just mean a little bit of a deeper dip before we move up eventually. We talk here about a possible wave 1, then an A wave, a B wave, and a C wave in a wave 2. So wave 1, wave 2, and that can lead eventually to quite a bit of an extension here, maybe even into the 30K region. So either we go up from where we currently are and probably go into the 26 to 27K area. One target points towards 26.7K. Or if we come down a little bit lower and hold the support area for the wave 2, it can put in quite a serious extension. In fact, if it does that, if it drops a little lower, holds wave 2 support, we have to expect an extension maybe into the 30K area. Yeah? So these are the two main scenarios. But if we lose support for the wave 2 as well, then we are probably going to face a strong dip into the lower 20K region, maybe even lower. Yeah? But we take it level by level, and at the moment we are here in a scenario where, first of all, we need to see, do we hold the support for the wave 4 or the wave 2? These are the two closest scenarios that we are looking at, and we will highlight that as a yellow support area. Yeah. So yellow means it's a bit more risk. Yeah, there's no guarantee it will hold anyway, but the thing is, if we lose yesterday's support, then obviously this is key support. But we also need to understand that this entire rally that started in November here, yeah, we've got enough waves to complete it. And also the minimum expectations here for the upside are met. So that's why it's lower probability that this support area will hold if we lose the, yesterday's low, and then also the low that was made on the 17th of February, 23,340. But yeah, it's still a turning point, possible turning point here to turn around basically. Yeah, relevant area between 23,313 and 22,190, and then we can put that extension in. In the very short term, there is not really much to report on. No news really. It's just hovering sideways, putting in a bit of a triangle, a little bit like Ethereum. Thing is, this doesn't look good. Yeah. It doesn't look good at all, and it looks rather corrective. So again, that's why I also say, we always need to be watching the chart, and this at the moment doesn't look very bullish. So be ready for a possible dip. Now, and that's really micro counting. I mean, I showed you that on the Ethereum chart. It could very well do here a small wave 1 and then A. This would be a B wave triangle of some sort, come down in a C wave, have a micro 1-2 setup. But then there is not much more space left to the low. So yeah, I wouldn't be surprised if overnight we make a lower low. Even better if we go higher from here. But if we break the support, then we'll probably head straight away into the other support. And you now know which support level it needs to hold to still give us that extension. Because if it doesn't hold, then we'll probably go into the much lower area, which is between 20,400 and 17,600. But this is then the area where we are going to see a decision. Is the bear market already over or not? But we take it level by level. What you should be aware of is that when we come into this region, this could already be the A wave, but we'll see. We take it level by level. First of all, let's see if we get here or if we go up straight away. So our primary expectation is to go up still from here, but probabilities reduce due to the weakness of the chart. If we go into this area, that would be the alternative. And if we even lose this area, then we are going to morph into the scenario where we've completed this entire rally since November, and we're going to test key support in this area, and we will be able to narrow down the area as we go along. In terms of bearish count, what is the bearish count? A few people ask me. Well, I do show it sometimes, and it's related to the idea that we haven't really got any confirmation that the bear market is over. Yeah. So a lot of people say it is, a lot of people say it isn't. We don't know. We take it level by level. Yeah. So of course, it could very well be that this move up since November, this 5-wave move, was a wave 1. And then we will have that for certain, or we know that for certain, if we come down an ABC correction and go into this area I just showed you. From here, we can turn around and rally in a third wave into the 40K area or more. But only if this support area holds, I can tell you with a high degree of certainty that the bear market low was made in November or not. Because what could happen, and it's the bearish count, is that we had just here in June, this was the completion of a third wave down. We rallied in an A wave of a fourth wave. We came down into November in a B wave of a fourth wave, basically a flat pattern. And we are now rallying in a 5-wave move, but that could easily just be the C wave of the wave 4. And therefore, this area down here, this support area, will be so important, because if we lose this area between 17.5K to, let's say, 20.4, then it indicates that we are having an impulse to the downside and on track to continuing with the bear market, and with a possible target around 13 to 14K. So that is the bearish scenario, and that's one that I'm still leaning to, just simply because I don't trust it yet, the movement to the upside. I still trade it. I wouldn't necessarily be short, because there is a realistic chance the bear market low has been made. But it's simply that, the daily chart trend is basically still down, off the all-time high. And because that's the case, and that will only change if we make a higher high, which we've done now, or actually not yet. Yeah, we haven't really broken above the August high yet. So at the minimum, we need to do that, and then we need to make a higher low. And then I'm happy to say the trend is changing. Until then, we always have to give preference to the current trend, which at the moment is down on the larger time frame. Here on the smaller time frame, of course, the trend is up. That's why I wouldn't be short. Okay. Yeah, and that's the situation with Bitcoin. So it's very interesting. Hopefully, we're going to see some movement, so that we're going to see a little bit more of an interesting weekend than last weekend. And hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.